Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. To begin with, we will have the previous questions that our team has prepared. That looks like that. We're going to go through the questions and answer the best that we can. Secondly, we'll have the dynamic questions, which is the true purpose of this webinar. This is a live questions and answers. You get the opportunity to ask whatever questions you have related to trading and see the answer on the screen. Okay, I will paste them down here. All the questions you have, feel free, don't hesitate. Regardless the topic that I'm teaching, by the way, feel free to use the question section to ask whatever you want, and I can see everything and I will answer them accordingly. The third part is more informative. I'm going to send you some links here to save you the trouble to find them by yourselves. And the last bit here, the slide is more to help us emphasize the analysis approach, really at the very basic level, but I have a feeling that we're going to have analysis on the questions we're going to see. Okay, so and also any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, the most common question maybe is if it's possible to get the recording of the webinar when we to get the recording of this webinar. And as I always say, all the content, all the webinars, everything can be found in our YouTube channel. It's just an imaginary amount of content. Just enjoy that, including this webinar, which should be uploaded to there as well, I believe, until the end of the day. All right, it seems like everything is in the right place. We are going to open the webinar, as I said, with the questions we have here. Let's see the chart. Okay, perfect. And the way that we are going to do that is simply by having a notepad here for the answers and the questions. You can quickly then take that, paste it down here, and then take it to the chart. Okay. All right, so the question here is how much is needed to trade one lot with NASDAQ, right? Okay, and the way that this can be done is very, very simple. What we're going to do is just click here and then just a second. Unfortunately, John, we're not going to do that because for that I'll need an account that suits for this trading style, which unfortunately I'm using a regular demo account, and I won't be able to demonstrate that. But thank you for the question. All right, so to see that, first of all, to see NASDAQ, we have to click here where it says Aussie Yen, right? Right in here in this box here, search box, clicking here, deleting it, putting NASDAQ, and then choosing it from the list, also known as US_Tech 100. Now we're going to hit the buy. We can change the buy or sell. I can know what turns on by if it's a lighter blue or a darker blue. You can see that the buy here is in a lighter blue. If I click here on the sell, it becomes the lighter blue, and I know what I choose. All right, so this, we can always change that even if we click sell or buy. Furthermore, to know how much I need on a certain position is, frankly, we're using the web trader, and the answer is already here. Okay, so all I have to do is just to click here, change it to one lot, I have the answer. But the way that it got to it is something we're going to look into, especially because not everybody's using this interface, which is a shame because you can see everything is very accessible. But regardless, I'm going to show you a way to calculate that, and even if you're using MT4, MT5, you'll still be able to know what the margin impact. Okay, in short, margin impact, or as known as margin requirement, is the bare minimum required to open a position. As long as I have that amount available, not on my balance, but in my free margin, Okay, and then I can take the position. Okay, the free margin is what I need, and as the margin impact is what I need, and not the value. Okay, so let's just put down a few numbers here. The now price for Nasdaq is 24.90. If it would have been a buy, it's $2 higher, 1.75 higher. One lot equals 100. That's the contract size for Nasdaq. If I would want to know more specific details about Nasdaq, and I don't want to, you saw that this is a very, very nice way to know how much one lot is. Okay, but if I want to go a little deeper, I can go to instrument details. Then I can see here the lot size is 100. If I scroll down, there is a lot of information here, such as the leverage, the margin, percentage out of the value as a result from the leverage, overnight fee, and so on and so on. Okay, so for the sake of this question, we're going to keep it as one lot. Okay, and we will see how the margin impact is this way. Okay, so what we are going to do is we're going to write down price per unit for Nasdaq, which is obviously 20,490. Okay, and the number of units, we already saw that it's 100, right? We understand how come it's 100 if it's only one lot, because lot is a measuring unit. And we saw that when we clicked on instrument details, the contract size for that is 100. Therefore, if I'll take half a lot, it will be 50. If I'll take 10% of that, it will be 10% of a lot, it will be 10. So number of units will be 100. And then we have price per unit. So we're going to do it this way as an equation. Price per unit times number of units equals value. Again, we don't have to know that because it's already written here. But if I would be MT4 or MT5 user, or frankly any other interface other than that, I would need to do this manually, and the way that it goes is 20,490 times 100. So we're going to take that, put it here, then times 100, put it there, and we see that this is the value, right? Super, super simple and straightforward. Therefore, the value here is 2,490,000. Yeah. And how did the let's bring it back to 100. And how did the margin impact turns out to be 10,000 and not this way? That is because of something called leverage. And with the leverage, if I'm going to write down here leverage, and the description is, first of all, the leverage is 1 to 200, since this is a global account and not a European account. All right, and the leverage here is what it does is it multiplies buying and selling. Okay, because I multiplied as if I would have 200 times more than what I have. With the same logic, I can just divide this by the leverage, and then I know how much I need. Okay, if I go back to instrument details, it's also telling me here that the margin here is 0.5%. Okay, 0.5% out of 0.5% out of the value. Okay, let's bring back to one a lot. And now, hypothetically, if I would want to really be sure, I would just multiply that by 5%. Oh, sorry. I would multiply that by just a second. Okay, I would multiply that by 0.5%, and there we have it. We just did it the other way around. Okay, never mind. Let's carry on with ease. The question here is how much money is needed, and the actual question here is how much margin is needed, right? Because money is it could be referred to something else, and we need his what we need here is margin, which margin would be the interpretation between my balance to the leverage. In other words, I can just divide the value by the leverage, and I have that. Let's try that. Okay, so again, 2,040,000 divided by 200, and again we have it. Okay, so let's put it here. Okay, divide by 200 equals 10,200. Perfect. Now, unfortunately, with my balance, what do you think, guys? Can I acquire this position, or it's too much for my account? What do you think, guys? Anybody has any idea? Can I take this position or not? I can't. Exactly. Thank you, Bill. So in this case, let's just paste. We can't really paste that, to be honest. But what I would like to write down here is value divided by leverage equals margin impact. Margin impact equals necessary amount to open the position. Okay, right. And we are going to take our equations. Actually, let's give it a shot. I don't know. Highly doubt that this will be in the presentation, but we can definitely give it a try. So let's take everything here and okay. As I said, because this webinar is recorded, you can just see this part again if something doesn't make sense. You can just watch it again, but just for the record, to have it in the presentation, we're doing our best to yeah, this is as far as we can go, I guess. Okay, let's get rid of the brackets. Will it do any good? Okay. Yeah, this is as far as we can go with fitting this into the presentation. Maybe we can also change the size here. Yeah, that actually doesn't look too bad. All right, is it mandatory to use take profit and stop loss? Yeah, where is our notepad? Okay, the answer for this, first of all, I would like to see what the audience is thinking. What do you think, guys? Is it mandatory to use or not? Anybody? Is it mandatory to use, or is it we can choose if to use it or not? I use it sometimes, not all the time. Okay, thank you, Alex. So we have somebody here who is using it every now and then. Okay, let's see how does take profit and stop loss is helping us, and also let's quickly learn what stop loss and take profit is. So we have take profit and we have stop loss, and we're adding here another pending order, execute when price hits. Okay, the way that this works is very simple. This one opens the position on the targeted price. Okay. Take profit, stops the position at the target price. Sorry. Closing the position. Okay, at the target price with a loss. And that one is exactly the same, but with a profit. Now, if it's mandatory to use, of course, we already know that the answer for that is no, but let's understand what happens if I don't use it. Okay, let's suppose, and let's actually stay with that, with NASDAQ as an example. Just gonna squeeze it down a bit, place a few lines, and then we can make a quick comparison to what can happen in a scenario that we don't use take profit or stop loss. Okay, just a moment, guys. All right, let's flatten that out. Okay. Let's pretend that our execute when price hits is somewhere here. And our take profit will be the, let's say, green line. Okay. Is it 20? Okay. And then this would be our take profit. This would be our let's make that our stop loss, and that let's make it this way. Okay, this is just to remember what can happen if we don't use it, right? So we have a take profit marked in green, we have a stop loss marked in red. Now all we have to do is just match the numbers, placed it right here at the platform. Okay, so 20,870 goes to the take profit since we are with a buy, and the number at the bottom, 18,245 goes to the stop loss. Okay, and that's great. Now, and of course, the numbers written here would only be relevant if I would be able to take that position, but I can't. So we have to maybe make it half of that. Okay. Now, let's have a look at that scenario, okay? When we are comparing, okay, so what was the reason that I placed those numbers? Those are approximately the support and resistance that we can see on this time frame. We can place more lines higher and lower, but it's really not necessary for us at this stage. What we want to know is if it's mandatory and worth using take profit and stop loss, and maybe that as well. Now, the most important thing, the important word I forgot to write down, closing the position with profit automatically, right? That is the beauty using pending orders, which I almost forgot. Now, how does that help? Because I can't slip by the computer and wait for prices to get to a certain level, I can use those to maneuver automatically. And when it gets to a certain level, just like here, it's going to launch the position, it's going to open the position. And in advance, I've already marked a certain price target to close it with the profit, and I've marked a stop loss to close it with a loss. Now, you don't have to be too bright to understand that with this stop loss, I'm going to wipe my account 7 times until I'll get there, right? Now, with this understanding, we need to know that this could have happened if, let's take a rectangle maybe to help us. Let's take one for that part. Let's take that for the lower part. And that one goes in red. The other one goes in maybe black. Okay. Now, if I wouldn't use, which I used to show you guys, to simulate, to show you guys, if it gets to the red line, I'm going to lose 72,000, okay, 700. If it would have dropped down a little more, okay, to 17,400, then I would wipe my account. Well, the point here, guys, is if I don't use take profit and stop loss, I have to monitor things manually. Okay, if I do place it, then I can do with it something called risk money management. And I can get it closer or farther away from my entry, which again, let me remind you, it's not this, but it's that, because of the execute when price hits that launches the position automatically. Okay, now, if I compare my entry with, okay, this price, and I understand it might be a little too far away, I can see the potential loss here is quite considerable. And I would like to take relatively a closer take profit to my entry, right? And let's suppose that instead of taking $2,000 down, we're only going to take maybe $100 down. So instead of 19,700, let's make it 600. Okay, this is still okay, to my personal opinion, to wipe 5 out of 10,000, it's not advisable. Risk money management stands for this is half of my account, but it's better than 72,000, right? Okay, the point being of this explanation is if I don't use stop loss and I forget about my position, it could turn out very, very bad. Again, it's entirely and solely only for you guys to decide if to use it and how to use it, and if to use the exercise that I'm showing you now to get it closer or farther away. But the answer is, if I don't use it, the answer is simple. It could go sideways, as we saw here. Now, with the take profit, the same idea, right? If I would have this position in here, 1970, if I would have it here, okay, let's suppose, okay, that we would have bought it here, and the take profit as we see here is 58,000 is what we could have made. Okay, that means that if I would enter here, and then when Nasdaq reached that level, I wasn't by the computer. Okay, that means that when it started falling, okay, I would already okay, I would definitely miss that, because the movement in here, okay, the movement in here, okay, as you can see, it didn't stay there for too long. It didn't stay there for too long. We see that a month after, it dropped down almost to the recent support line. Okay, and now we understand the benefit of using those things because they activate it automatically. I don't have to spend a minute on the chart after I'm done with the composition. Of course I can, and I probably should, but I don't have to. I don't have to spend time because this happens automatically. And I can just check later on if this scenario was okay or not. Again, of course, you have to monitor all the time, maintain the level, the margin level, and risk money management. But this gives me a lot more control, okay, to do risk money management, to customize my loss ratio, compare it with my balance to determine where can be a good place for the take profit. And even if I don't have to, I'm not by the computer, it will close it and claim my profit. Okay, but we get the point, so let's move on. Do we have any questions regarding that? Any questions about the question, obviously? Any questions at all? All right, let's carry on. There's a question here from Demian. Yes, of course. Demian, yeah, of course. Of course, I'm using a stop loss and take profit. It's thank you for the question. Okay. All right, let's carry on. Let's take that. Also, let's write down a quick answer here. It is not mandatory to use any pending order. However, we should consider however, not using them, I don't know how to describe it, so it won't hint any obligation, because the point here that this is not it's not mandatory, but you understand what can happen if you don't use it. So it's not mandatory to use any pending order. However, it can help save time by activating the position automatically. Not just activating, but also activating and closing. Okay, closing the position automatically without being on the chart. Okay, and as we spoke about it, risk money management, to grab a great opportunity that we don't necessarily on the chart at the same very moment. Okay, let's try the same trick again. Gonna minimize that, unbold, and that's perfect. All right, do I need, this is exactly, you see, this is the answer to this question, right? Is it, of course, we're gonna break it down, but we've already understand, do I need to spend more time to make more money? Right, so let's suppose that I've placed this position. Spending more time will not make me make more money, right? However, if I use the other time that I'm trading to do the rest of the process, so let's suppose I've done some analysis, I have this composition, okay, I click here buy, then I go to the positions and I review, okay? And of course, if I spend more time, I get more opportunities to trade and to analyze and to work with my account, but it's not a formula depending on time. I mean, the money factor and the time factor are not tied up. I can still, again, as I showed you, let me show you another one. Let's take something a little more exotic. Let's look at maybe wheat, right? With as much as I would want to show you guys some stocks, US market is still closed. Okay, and because it's closed, we can play with commodities. And as you can see, wheat here is sitting at 591. Let's try the same exercise as we did with the with Nasdaq just a moment ago. Okay, so again, hypothetically, if I wouldn't want to waste a minute of my time, and I'm very, very busy during the week, so now I can think of a position to hold it for a week. Just a second. Okay, and let's suppose that this seems to me like a good entry, 555. Stretch it down a bit. Okay, so 555 will be my entry. Okay, this time maybe hoping for. Okay, let's just a second, guys. Let's make it a sell. Let's make it a sell, and instead of this entry, let's make the current price maybe a little higher than that our entry. No, let's keep it as it is. Let's make it 590. Okay, 590. 590 will be our entry. Okay, because we are now with a sell, we have to turn it around. So 590. Take profit will then be, let's suppose, 555. Okay, stop loss. Let's make it just a second. Okay, let's make it 625. Okay, maybe. Okay, let's keep it again. This is only for the sake of this question. Okay, and as we saw, spending time on the chart. Well, let's see if we can utilize the pending orders. Okay, so in this scenario here, we see. You know what? Let me take it down just a little bit. Okay, and now we can see what we have here. What we have here is a sell scenario, okay, hypothetically selling at the price, almost the price we're having now. And this is the price that I destined to my profit. Okay, now once I have released what I've done, once I've done composing this position, okay, I don't have to do anything to the favor of the success of this position. Okay, I can, by the way, just for you guys to know, I can close the position before it gets to the take profit, before it gets to the stop loss. Okay, so that means that even if I used, I'm not saying, by the way, if it's a good thing or a bad thing, okay, but I can do it. Okay, I can do it even if I place take profit and stop loss. This one I cannot change. Why when the position is open, so it's open, then you know, we cannot withdraw the position. Okay, so whenever it's already on, so it will open. But the take profit and the stop loss we can modify along the way. And furthermore, as we said, we can always close it before it reaches those levels. So what I can typically do if I don't want to waste time on this position is just click here, sell, and everything will happen automatically. Whether I will make 1,900 if it gets to it, or I will lose 550 if it gets to the to the stop loss. And as I said, I'm free to choose whatever I want in between. Okay, that means that this is a huge time saver. If my weekly target is 2,000, it's enough for this position to get to the goal, and I'm very happy with it. Okay, I hope that it helps. Do I need to spend more time? It is not required to spend more time to make more money. All right. However, spending extra time can contribute to analysis, risk money management, and strategy improvement. Okay, again, it's not all about the money. We're using our time, trader. We're using our time to do different things as well. Okay, because making money is not always the problem, right, guys? We understand we have to protect ourselves. All right. How often should I change instruments? This is actually a very, very nice question. I don't think that I ever got this question in this live Q&A format. Very, very interesting. So this is actually, let me ask you guys, how often should I change instruments? And for the people who don't know, instruments are the other name for contracts, right? Whether if it's a stock or any other asset, we can call it an instrument. Okay, we're calling, let me show you down. Okay, all of those are instruments. We're using this instrument to make more money. Very, very simple. So what do you guys think? Is it, first of all, is it recommended? And even if it's recommended, how frequent, how often should it happen? Let's play some options here. Okay, we have A, B, C, and D. So you guys can vote. Let's say, let's begin with the most extreme per position. Let's say per maybe day, per week. You know what? Let's make another option. Breaking the structure here. Per week. Let's make it per month. And the last answer would be we shouldn't change instruments. Okay, what do you guys think? Should we change instrument every position? One position with wheat, one position with Nasdaq, one position with that. Should we change the instrument per day? Should we change it per week, per month, or we shouldn't change the instrument? Now, the obvious answer for this question is whenever we want, right? Whenever we want. If I'm making money with wheat and I'm enjoying analyzing wheat and my strategy is successful with wheat, why would I change? Why would I change, right? I can always explore more instruments and expand my horizons and have a wealthy strategy with 20 or 50 assets or more, okay, instruments or more, but I don't have to. I don't have to. There is no obligation for me to trade a lot of instruments or to for the other end as well. It's not mandatory to stay with only with one instrument or two. It's very flexible. So the point of this, the answer for this question is that depends on the strategy and that depends on my success and my confidence. Okay, as good as I am with the instrument, if I try to trade wheat for I don't know how long, for a few weeks now or a few months, and I see that it doesn't go well, wouldn't I change it? Wouldn't I want to try something else? Because wheat might be something that I'm not really good at, right? So it's really dynamic, and it's difficult to pinpoint a specific time frame to shift between instruments. I would definitely recommend to have an A/B test with different instruments and to take it for a period of time and check the performance data and see how good you are in front of your goals. So for instance, if I set myself a target to make, let's say, $1,000, okay, $1,000 with wheat per month, okay, it's part of my portfolio, it's part of my diversification. So I can put it separately and say, okay, wheat, my target with it is to make $1,000, breaking it down to positions, breaking it down to the strategy, embedding it into the risk money management, and so on. Okay, so this is very, very dynamic. Yeah, that's basically it. So the answer I'm going to write down here is we can consider changing instruments depending on our performance. It's not only the performance; it's also the joy to, again, to analyze. At least I don't know how it's working for each individual, but when I analyze, I also enjoy analyzing, enjoy the process. It's not always about the money. Okay, so we can consider changing instrument depending on our performance. Dynamically, let's keep it as it is. Let's keep it as it is. Maybe performances and comparing different instruments to reaching our goals. As we said, we can try and make a little bit of money with wheat, maybe with another instrument, Apple, another one, Nasdaq, another one. Okay, we can compare all these assets, how good we are, and then we can prioritize what instruments we were good with, and then we can maybe improve and focus on things that have already worked and evolve with that, rather than to keep changing instruments. Okay, this is also one of the options. All right, it's very, very dynamic. It's very dynamic. Okay, let's try the same trick. Same trick we used before. Okay, this way. Just a second. Let's see if something here. Oh, maybe that's one we can. There we go. There we go. So all the answers are pasted down here. Let's carry on to this slide here to share with you guys some links. Let's take that. And what I'm going to do is just paste it on the chat function. You should see it on the bottom left. Let's take that as well. Just to log in and make a deposit. If you're still with the demo and you want to feel the market. This is also for a real account. Okay, the previous one, this one, the help center and the FAQ is for maybe more official questions if you've got about the company or the account. The academy is for tutorial. For the academy, I'm going to show you now a very nice way to access that, not through the link, but through the website. Okay, let's fold it down. Fold it down. Okay, and here at the left-hand side, we have some buttons here. Maybe we'll go through that briefly in a moment. But for the academy, all you have to do, you see this play button here? If you click, you don't have to click it, you can just point it. And then you click on academy and it takes you right here. Okay, and the tutorials, which I always recommend. This is, again, it's free content, guys. You should enjoy that. Okay, all kind of things, what is a pip, and all kind of things here to enjoy. Another thing that I wanted to tell you guys, we have amazing instructors, amazing, to give you guys webinars just like I did today. Amazing regards analysis, fundamental and technical analysis by Mr. Frey and Mr. Friedman. And you should, again, if you want to have educational content which is useful and practical, I suggest you'll watch them as well. What I wanted to go through before we say goodbye is just quickly just the logic of technical and fundamental analysis here. So each candle here is shaped differently, and I'm going to, maybe I should better show it to you on the chart. Let's have a look at the chart, and let's get rid of Actually, no. Let's keep it as it is, and then maybe we can take advantage of what I did. So as you can see, there are some candles. It looks a bit different. I'm just putting a rectangle on things that I think we should analyze, because we're not going to analyze all of what we have here. Okay, as you can see, we have here a reversed hammer, which is followed by two candles with their tails at the top. Okay, one is bullish, one is bearish. And then after that, wheat was bearish. Okay, so that means that the beginning of the structure was bullish. That means going up. In the middle, this one looks like it's bearish. It's bearish. Okay, but this is not, the red area is not the candle. Okay, we should understand that. What is this area here? This area here is where it fluctuated. So that means that the red area here is just the results. So this candle actually started in here. Started at the white line. It reached all the way to the green line, but it ended on the red line. How can we possibly know that? Only by the shape of this candle. It's because, let me see if we can. Okay, it's because, as you can see, okay, the shape of this candle has helped us identify this nice structure. As you can see, this is exactly what we saw from outside, right? If we go outside, okay, if we go back, okay, just a second, we will place it carefully. Okay, and as you can see here, this is the same candle as we've marked. The white line is the beginning. It reached the green line and then turned around. Okay, we switched 2 days to see that. Okay, again, we can see it went up, went down. Okay, how is that how does this candle, any indication to opening a position, taking advantage of this trend? It's not about the particular candle that we saw. It's about what happened afterwards. Okay, and what happens afterwards is it was rejected. As you can see, it was rejected twice. Okay, let's get rid of that for the time being. Okay, it was rejected twice. It was rejected and then it started going down, which can potentially hint about another reversal, which we saw here on the way. Okay, and again, it broke the support line and then it went up. Okay, how is this again any help to our analysis? Because now we know that with the current price we're having now is somewhere in the middle, right? This is the top 700, this is the bottom 500, and where we are at roughly 600, right? We're roughly at 600. So if I wish to buy, I understand that the next station of this train might be somewhere here, and afterwards might be somewhere here, right? If I'm intending to sell, I understand that the possible next potential price might be somewhere a little higher. I've intentionally placed it down below their support line just to demonstrate, okay? But possibly, maybe I would place it this way. The next line we already saw, it's 501, maybe a little higher, 505, okay, which is higher than the previous support, 525. Okay, so it all comes together. At the moment, we are consolidating, so there is nothing to hint it will go higher or lower, even though the previous movement was bullish. So we might have a reason to believe it will flinch up a little higher and then turn around. Okay. All right. This is a nice way. This is a nice way to begin learning technical analysis. Okay. And the second analysis we have is fundamental analysis. Fundamental analysis, in difference from what we saw on the chart, is actually if this is how the market is moving, right? Those are all numbers, statistics, numbers, averages. Okay, so this is how it's moving. This is how. And the fundamental analysis will be why it's moving this way. Why is it moving this way? Why wheat reached a whole different level during COVID? Because there was a shortage in transportation. Sorry, it wasn't, I believe in COVID it happened, and then it escalated during the war, right? So we can see that right away on the chart. We can see it right away on the chart that fundamentals are as important, if not more, well, I don't want to say more important, but let's say that they are equally important to the technicals. Okay, it's a great way to find a golden nugget with a nice entry and then to make a considerable amount. Okay, so fundamental analysis, how exactly is this how can it be done? There are several ways. The instant way is to go here to the news section. Okay, as you can see, we have a nice news section here which can be filtered by different things. Okay, and then after the articles, if you want to see what this article is about, you can see a related instrument. Okay, this only has one, so it's not a great example. See, this one has 4. I click it and it shows me what's the possible instruments is according to what we saw here. Furthermore, I can take it to a bit more professional level with the economic calendar, and I can specify according to certain results what can be the potential outcome. Of course, not a higher number doesn't always lead to a positive movement. It doesn't always lead to a positive movement. Now, what do I mean by that? There are events which are informative. There are reports which are informative reports describing a certain percentage, which could be positive or negative. I'll give you an example. So if I see the inflation rate, okay, we're not getting into that now. I'm just giving you here an example. Okay, the inflation rate report. Who knows what it's called? Anybody has any idea? CPI. Okay. Okay. So the CPI, the Consumer Price Index, okay, is one of the reports that we have, which helps us measure the inflation rate. Now, how do we know if it's if the number that let's suppose if the number would have been higher, the result would have been positive or negative. Okay, we understand that the inflation is something negative. So the higher the number, the more negative the situation will be, right? So it's not as I want to give you a comparison here, an example for a comparison. All right. So if we're looking at the performance report, right? PMI is an example, or something that has we are expecting a higher number. Okay, so a higher number can show improvement in the economy. The NFP can show improvement in the economy. The higher the number, the better the result. The better the result for the market. But if we're looking at a negative report, it's not a negative report. It's measurement. But the point here, if we're looking at a bigger number, so it might not indicate a positive movement, but the other way around. Okay, I hope that this is not confusing you guys. The point here is to let you, to give you the ability to tell the difference, how to use those events to your favor. Okay, you can also click on it. Click on it as an example, and then it's showing you here durable goods order, refer to new orders placed in manufacturer for delivery hard goods, which means to last at least 3 years. Okay, and then this is US flag, so obviously this is US economy related report. Okay, and if I go here to impact, it can hint to me what can be the impact. Unfortunately, we don't have time for that. We are already done, but I'm just expanding it for you guys to know how to maneuver with it. Just be careful when you're pointing, when you're going through the events, to read what they are about and how the number is affecting the market. Okay, just on a nutshell, really on a nutshell, the way that it's constructed is this was the previous result. This is what we expect to happen, and the gray area, blue here, the actual is after the event has took place, is after the report was released. As you can see, there are different levels of impact. We can click here and filter by high, medium, or low. We have here different countries. We can specify if we want to focus on a specific country. It's going to show us only that. And if we would like to filter it by the dates, we click on the date and the following one, and then it's going to summarize only the dates that we choose. All right, lastly, I'm going to give you the guys here the benefit, so you can give it to your senior account manager and enjoy a one-on-one premium market review. I highly recommend you guys to use it, because there is no better analysis. There is no better thing than to do analysis live and enjoy the charts moving and learning from that live. Okay, Q&A benefit, it's a special promotion code. Give it to your senior account manager and claim your eligibility. Unfortunately, guys, our time is up. I wish you all best of luck with your trading. I hope you enjoyed, and have a good day.